so to start off, right to my right, we got Dave Balter. Dave is partner at newly announced crypto investment club, Flipside Crypto, and is also CEO of Milestone, and a venture partner at Boston Seed Capital. For Milestone, Dave, he's been a serial entrepreneur, was CEO of Smarter, and then before that was CEO of Bussgang. To the right of Dave, we have Jeff Bussgang, general partner at Flybridge Capital Partners, which he founded in 2003. Jeff is also a managing partner and founder at the Graduate Syndicate, which is a micro-seed fund that invests in seed and pre-seed startups by recent grads, by Harvard grads. He's also a senior lecturer at Harvard University. A lot of Harvard in this bio. Was an entrepreneur before starting Flybridge and Converge, and Flybridge are co-investors in Enigma, which just completed their token sale. To the right of Jeff, we have Rich Dulude. Rich is principal and investment manager at Underscore VC. Previously spent time at Founder Collective, also a Harvard guy. Before that, he served as CTO for social media sentiment analysis company Popped, spent time as a brand manager at Procter & Gamble, and then began his career in FX trading at Goldman Sachs. To the right of Rich, we have Jamie Goldstein. Jamie's founder and managing partner at Pillar, which he founded last year in 2016. He's also an investor in Library. Jamie, before Pillar, Jamie spent 18 years at Northbridge Venture Partners, where he was general partner. And as for myself, I'm a co-organizer for the night. Thank you all for coming. I'm a venture capitalist with Converge, and I'll be quarterbacking this panel on investing in blockchain and cryptocurrency companies. I'm also the founder of Boston Crypto, which brings Boston entrepreneurs, investors, and enthusiasts under the same roof. I've been investing in blockchain and crypto companies for the past 2 years. Enigma happens to be one of those companies, and the other is Chainalysis. Dave, let's start with you. You just had an announcement this week on Monday. Let's talk a little bit about that, because you've told me explicitly not to use the word fund. So, let's just get started there.
Right. So for the lawyers in the room, we are not a fund. Don't come after us. This thing's funky. Okay, so we basically, we had a problem that I'm guessing some of you had. How many people have tried to buy crypto not on Coinbase, something that's a little different? How many people successfully encrypted it? Yeah, so it's a few of us. For my problem started when I tried to do that, because all my coworkers were, and I totally lost a bunch of currencies somewhere out there in the wild, and said it's not trying to think about what you want to buy, it's actually figuring out how to buy it, how to encrypt it, how to store it, what the hell is cold storage, what's a digital wallet. And so we went out and said to a couple people we knew, hey, we know how to do this now. If you want us to do it for you, we can. And so we structured it as a club. People give us money. We have some algorithms to understand exactly which cryptos should be bought. We build baskets, we put them in wallets, we store them, and we give it to you. Okay, an important part of it, we don't trade, we don't hold your money, but we basically help facilitate getting into this market. So that's why it's a club and not a fund.
I'll be taking that back. Okay, so Dave has one angle of investing in crypto. I want to get the sort of the other three panelists' perspective on investing in cryptocurrency tokens and equity and blockchain companies. Rich, we've talked a little bit about this. All three of us have talked about this. So, do you guys, can you just give us some perspective of what it was like talking to your LPs and sort of going through this process? We've all read about USB and Andreessen being pretty public around how they've changed their LPA docs, but we'd love to hear that firsthand.
Is this one on?
Yeah.
Great. So we, as Ash mentioned, just went through the Enigma ICO, which yesterday closed a couple hours after it opened, raised $45 million. And we decided as a policy after talking to our LPs that we would not invest the fund in the token. We were investors in the pre-seed round when the company spun out of the MIT Media Lab, but we decided that we would personally invest in the token as partners to have a small part of the experience and also to be supportive of the company at a personal level, but that we wouldn't expose fund capital to it. That was a particular decision that we made on this one. And the policy statement that we said to our LPs is, look, we are not crypto hedge fund traders. That's not our business. We're early stage venture capitalists and company builders. And so we think we know how to do that, and we try to do that really well. We don't know how to be great crypto traders, and so we're not going to pretend to try to do that. We think we have an angle on this particular company and a thesis on this particular company, but we've made our investment in the pre-seed round, and we're going to ride along with that. So that's what we decided to do.
Yeah, I'm happy to chime in as well. So Richard from Underscore, I think this is on. Can you hear me all right?
Yeah.
Good. So we were a venture fund, $85 million venture fund, started 2 years ago. We've actually written some agreements with blockchain entrepreneurs that have the option to convert into tokens or equity, which is a very interesting thing I hope we'll discuss of like where does the appreciation happen in any of these companies, as it is a little bit split between the equity and the tokens. And so at this particular moment, we are in the process of an ICO for one of the companies that have gone through one of those agreements, and there's US dollar value attached to that option at this moment. And so we're actually having that discussion with our investors in our traditional venture fund to decide if we want to go forward with that or not. So it's really at its fulcrum right now for us as a venture fund to decide if we want to become a cryptocurrency hedge fund, create an entity that is a cryptocurrency hedge fund and capitalize that to take options, or alternative structures, and we're figuring out what is the most elegant solution for that.
So, I don't think this works. We're a little bit of a different animal in the venture business. We were co-founded by a group of 16 of Boston's most successful tech entrepreneurs. So our LPs are really entrepreneurs and entrepreneurial by nature. And so when I asked them about this, they sort of said, well, what do you want to do? Like, where do you think is the opportunity to make money? We got into this about 17 months ago when I met Jeremy Kaufman, the guy from the library who sat here, because honestly, we thought he was a really compelling entrepreneur, and I hope you guys thought that as well. Just a commonsensical guy who wanted to build a real business. And honestly, the token was like the last part of the investment. We weren't even thinking about it. Back then, the token was worth like a fraction of a cent, and we were sort of trying to convince him, maybe the token thing, like, let's put it to later. Let's focus on free content or US dollar content. And he stuck to his guns and said, no, you don't get it. This thing is critical to what we're doing. And like, okay, I don't know, like, we've been doing this a long time. That seems like it's complicated. And then the token went from, sub a penny to like a penny to a nickel to 20 cents. And then a few weeks later hit $1, and the company's sitting on 400 million of them. And like, holy smokes, the light bulb finally went on. Like, this is a new way of building a business, and you can do a lot with those tokens that acquire customers and acquire content and make payroll and stuff like that. So at that point, we were talking to our LPs about, okay, what do we do here? Should we do more of these? Should we try to should we create a structure where we can have equity upside, but if the token runs, then we can get liquidity through it? Honestly, we're trying to work with all the lawyers right now as to the best way to have that optionality, including the guys from Cooley, who I think are the leaders in this space. There's no clear answer yet. They gave us 6 different alternatives that might be possible. Some are sort of more attractive than others, but we also would love to find, we don't know whether equity values and token values will track in parallel or not. I thought the guy from Coin made a great point there. And so we kind of inclined to be company builders. That's what we've done in our entire careers. But the token looks like an interesting exit opportunity. So you don't have to wait 7 years to get liquid in investment, which is kind of the standard today.
Rich, I want to go to your comment.
Jamie made a point that I want to just kind of underline. We have no idea how this all will play out, and we're having all these discussions in real time as well. So he said something that's really profound. Where's the value being created? Is it in the equity or in the token network? And if our only instrument is an equity instrument, then we could be building companies that create a huge amount of value in the token network and not take advantage of that. The entrepreneurs have the same issue, right? If you're an entrepreneur unless you find a way to participate in the token sale dramatically, perhaps holding back 50%, 70% of the tokens, then you also don't have a way of participating in the value creation. And then what's the governance between the two? Who governs the token value? Who governs the equity value? So it's a really complicated set of issues that we're all kind of fumbling our way through in real time.
So, Rich, you mentioned you guys are sort of going through the process of thinking around potentially spinning up a crypto hedge fund. And, I think from an outside perspective, that can, that's a different sell or different value proposition for entrepreneurs. We've all heard tonight a lot of the value recently has been created on the token side, and these are liquid, as Dave will go into more tonight. David, all right, we'll go with that. Yeah, Rich, give us a little breakdown, like how you would market that, and just go ahead.
Yeah, so I'll give you my view is you can segment the venture or the investing market into a couple of different buckets, right? There is the post-ICO, coins already trading, it's out there, you're much more of a cryptocurrency hedge fund. I think it is very hard to find what investors call alpha in that space. And in fact, if you look at any of the individual token offerings in that space, like you pick a single coin, even if it's a killer coin, rocketed 1,000%, you've probably still underperformed some of the base currencies like Bitcoin and Ethereum. So why are you even investing in those? And I, as a company builder by background, don't think we have an edge in that. So am I thinking, are we a post-ICO venture hedge fund? Probably not. Could we participate in token sales? Probably, but for companies that we've participated in even before. And I think I have made an investment in another firm that's a cryptocurrency hedge fund called Polychain Capital and another called Block Tower. Interesting firms in their own right, participate in these actual current ICO vehicles, but you have to have differentiated access, and it is going to be very hard for the average retail investor, if you will, to get differentiated access to those, especially the pre-sales. So where do we play as company builders, and I think most of us, is in the early stages, right? Helping companies at this pre-ICO stage build a team, build a product, go after a meaningful market, all of the traditional things a venture investment firm does, and then also have the vehicle to participate in the upside. So do I think of us as a cryptocurrency hedge fund? Probably not. We're just a venture fund 2.0.
Fair enough. Dave, you're not doing anything on the equity side as of today. Tell me about that. But do you need to interact with the entrepreneurs at all? Do you expect you're going to in the future? Or would love to hear more about what you're up to.
So obviously for any of these companies that end up ICOing or existing in some form, you do want to know that they're real businesses and that they're doing real things. I will say, maybe to Jeremy's point, I don't know, I believe ICOs will take this industry down very quickly, very soon. So I am an investor in this space, but there is so much hype and so much issue going on with the ICO market. For all the good ones, Filecoin is great, it's fun, you can look at it, great. This is the thing that will cause all these people in this room to go, oh shit, what did I do? Okay, so we are not investing in ICO, not because it's hard to get in or whatever, but because in the world of get-rich-quick schemes, that is about as get-rich-quick as you can get. We are in the business of, let's look at things like volatility of the actual trading that's happening, GitHub commits, is there a network being built, etc. And yes, the team matters, and at that point you start to say, is this something worth investing in? But I would, if I was any people in this room who are not real excellent investors understanding businesses, I wouldn't touch an ICO. I would stay on the sidelines, be smart about it, invest in the right spaces.
So I want to keep digging into this equity versus sort of network value theme. Jeff or Jamie, you guys have been investing for 20 years in equities. Tell me about, does sort of the token and the network value, does that threaten equity going forward? Will there be, and it's again, we're sort of at the forefront here, who knows what's going to happen in a year or 2 years, but would love to hear your perspective around the role of equity, especially given your experience.
it's massively disruptive. If you think about all the structures and systems and processes that have been built around equity, whether it's stock option plans and grants, whether it's legal frameworks, whether it's governance, control, voting shares, all of these things that have been structured around the whole notion of equity financing, that is now potentially highly disrupted by token financing. So how do you incentivize employees? Do you give them tokens? Well, what if your tokens crash? Because tokens are far more at risk of being far more volatile. Or what if your tokens go 100x or 1000x, like what's happened in some of these companies, and suddenly you have all these paper millionaires 6 months in, 12 months in after an ICO who can just walk out the door. How do you handle vesting schedules? How do you handle clawbacks? How do you handle acceleration? How do you handle M&A? We have no idea what happens when these companies get acquired. What happens to the token network? What happens to the control of that token network and the value created? So these are all things that we're all trying to figure out. As I said, we're kind of stumbling along and realizing that there are just incredibly profound implications that these token sales and these distributed networks are creating.
Yeah, I wouldn't want to be a Series B, C, D, E investor trying to get into crypto deals because I don't think there will be any. I think they'll sell tokens, they'll raise money, whether ICOs or just sort of whatever evolves from it to be small token sales that you can do. Why sell equity when you can sell tokens? We are hoping, and it's possible that we're delusional, that very early stage companies will want more than just money. They will want the help. Because I think you've heard a number of panelists say, like, in the end, you have to build a real business. It has to be successful in order for the token to have long-term value. And so our bet is that entrepreneurs will want that help at the beginning to build their team, to get the strategy set, to execute the marketing plans, to do whatever token sale they want to, and then build a real business. And that they're going to want an early-stage partner in order to do that. And the small percentage that a firm like ours would buy is well worth the trade-off of increasing the likelihood of success. So I think it is massively disruptive to the entire business, not just venture capitalists, investment bankers, lawyers, everybody. That's kind of what makes it fun. I don't know if you talk to people that are spending time in this space, we're kind of like giddy because there hasn't been something this fun and interesting that's come along in a long time. Of course, we're seeing new technologies every day, but not our business itself. And that's what's made this so appealing.
My joke to Dave when at the break everybody walked out was they heard it was the VC investor panel. Nobody needs VCs in this part.
The crypto capitalists.
Yes.
Let's come up with that. Awesome. Yeah, I just thought that was really Yeah.
Ash. Yeah, Ash said it first.
Yeah, I'll take that hashtag. Okay, cool. So let's see what else we got here. One of the things, so before this panel, we were sort of talking about, out of our collective portfolio of companies, how many of these are actually potential token candidates. And we're also, sort of going through Jamie and Jeff's historical portfolio, and we sort of heard, it was actually, I was super surprised how the numbers, but give us some perspective there. I'd love to hear your guys' thoughts on, and also these conversations I'm sure are happening daily. I know from for Converge, I do have a number of our CEOs that are exploring both blockchain technology, but also thinking around tokenization. So, yeah, from your guys' perspective, what are we thinking?
So I'd thrown out when we were talking in a pre-panel conversation, we think about our portfolio, and we think about companies that maybe some open source companies like MongoDB, or very community-centered companies in our portfolio like Code Academy, or even distributed storage companies. Jamie's previous firm, and we are investors in a company called Masuni, which is a distributed file storage platform, SaaS company. Probably all of those, if they were started today, would be considering tokenization strategies and eventually funding strategies that rested on ICOs. And so my kind of estimate was around 20% of our portfolio probably would be relevant. And the funny thing is that probably 80% of our portfolio is asking us now about it, but only 20% are really relevant. So it doesn't exactly match up, but that's because smart entrepreneurs smell opportunity.
Yeah, I'm happy to chime in with my perspective on that. So we've been open source investors for a long time, and actually tokens are a very interesting business model for open source. And actually, if I had to, oh, can you hear me?
Yeah.
Is this on? Yeah.
It was on.
You've got 2 mics.
Yeah. All right, good. So we've been long-term open source investors. Have a couple in the portfolio. Probably something in the order of 25% of our companies are open source. And it's a very interesting business model for open source projects or anywhere where there's really a community involved to one extent or another, or really any network-based business. I fundamentally think of a token as the most distilled atomic value for a business model. And so if your business model actually makes sense for that, like things like Coin or others that really require complex coordination, are very, very interesting businesses for that. But I don't think it's 100% of our businesses, but very much to Jeff's point of there's a lot of interest in it from a lot of the portfolio we have.
Yeah, it's about a third of our current portfolio of 14 companies are either blockchain companies in the process of trying to be blockchain companies, or you can imagine at some point in the future they would issue a token of their own.
What about for Buzz Agent or Smarter? Would you have issued to?
Yeah, I mean, Buzz Agent was a network that had a million people who were doing stuff on our behalf. Jeff was on the board. He's a wonderful board member. Yeah. Never told him that, so. Thanks, man. Okay. Anyway, so yeah, we probably would have at times where we were looking for the next round of capital or figuring out how to grow the business differently. Probably, yeah. I mean, it seems like an obvious answer. Like we'd either go out and try to raise and knock on a lot of doors, or we could go do this ICO thing and tokenize. It probably would have worked quite well at Buzz Agent. Smarter, I bet we would have tried to have done it for all the wrong reasons. We were short on cash, the network was unclear, but you know what? There's a lot of people. Let's go raise some money.
Yeah.
So yeah.
Sounds like a $50 million ICO.
Yeah, we'd have done 50, and then we would have gone to Acapulco. Right?
Lambos, yeah.
But this is Lambos. I had to look that up. Okay, so but this is the entrepreneur mindset, which is really important right now. I think these guys are thinking about it really right as investors. But you know, AirFox. Anyone from AirFox here? AirFox just did its ICO here. Good for them. $6.5 million. The number of entrepreneurs
That's just the pre-sale.
That's the pre-sale. ICO is coming. See, he's already marketing it. It's going to do better and better. Get into AirFox now, right? A lot of entrepreneurs right now show up and say, AirFox did it. We can do it. Do what? ICO. How? Write a white paper. Okay. For what? Right? Like this is and some of those companies will actually raise money. I don't know if we're crazy right now, but like be very careful with that, right? These guys are thinking about it very smart because they're savvy, experienced investors, but just be careful.
All right, I want to do an audience question right here for Mr. Tydenko. So, if the panel owns...
Should you buy AirPods?
Can you please tell the audience to buy AirPods? If the panel owns phones in the future, what process or ethics would govern their exits, insider trading issues?
I'm sorry, say it again?
Yeah, it's a great point, because so if we were holders of cryptocurrencies in our portfolio companies, what would be the rules of trading? How would we handle insider trading issues? Would we dump the currencies that deprecate the value of the network? And by the way, these things are all basically public because it's out on the blockchain, so if people see that the lead investor is dumping, heavily the token, then suddenly people question the value of the network. So I think those are all really interesting questions that we have no idea. I mean, even just the joke we just made about AirFox. Okay, we have a company that's confidentially filed to go public. I can't make that joke. Like, I can't say, hey, you all should, buy a stock in company X, because that's a violation of SEC rules. I think Miguel will tell me that, right, Miguel? But you can say that about the AirFox token, like that's okay. And when that company goes public and we are restricted as board members of the company in our sales, and we have to file for those sales, but ties a shareholder.
I gotta imagine that
You can sell whatever you want.
Just like an executive has a plan, I'm gonna do so much on this known process, you would announce it. I cannot see another way.
I would think you'd have to do these kinds of programmatic selling programs, which we've all been dealing with in the IPO market. So there are a lot of analogies, but the rules are so immature, so nascent.
But it feels like that's where we are as a period of taking some of the best practices that have existed out there for ages and starting to port them over to this new world. Is it early? Definitely. I think the way to solve that is actually a lockup period. And in fact, I actually think all regulation in this space will be done by code as hard law. And in fact, you have to subscribe to that to get any transaction to execute. As another signatory, the SEC or others will probably be as part of that. And in fact, it's nice because you can define it. But I think there are a lot of challenges.
I never thought I'd want more regulation in anything I did. But here I'm eager to sort of have it settle so that we all know what we're dealing with.
Great.
So I want to keep going down the path of getting out of these positions, or sort of let's say you do go the call it the crypto hedge fund route, and of course that'll change as this space develops. But what do you sell into? Do you go fiat? Do you go Ethereum, Bitcoin as investor? And of course this is going to change, but like, how are you guys thinking around it? Dave, I mean, you also give us something.
I don't know if I know the question. I wasn't listening.
It was a tough question.
Yeah, it was a tough question. I know the question, but I'm not quite
I'm glad you
sure
didn't ask me.
Want me to help you out?
Yeah, you would. Yeah, Jeff has one.
Richard will answer the question.
And then I'll also give it back to Jeff. But no, I think, so I have a view on this, if it's helpful. So the question to re-articulate it was, when selling positions, should you have that opportunity, do you sell back into fiat or alternative cryptocurrencies? I think it's an interesting question in its own right, but my stance is it's wonderful to invest in fiat currency because I understand it. I've understood it my whole life. I understand to what extent that has. There's less volatility in it. But I think the reality is, when you look at any of these cryptocurrencies, literally any, the thing that's not talked about is that the supply is totally, in some ways, arbitrary as determined. So if you think of the price that's anything is set as the amount of dollars that's in that thing versus how many of that thing there are out there, what's interesting is in the denominator of that, there's this whole variable, which is the token supply, and that can be determined in treasury by the entrepreneurs, totally arbitrarily, or by XYZ. And so the thought of should any of these things have a standard price, or how do you even value them, is very, very hard because there's no standardization in the way supply is calculated.
I think the IRS is going to have their say in this, and if you can swap from library credits to Bitcoin tax-free, I think you'll see people sitting on Bitcoin, and when you convert it into cash, you pay your 40%. Then I think people are going to put that in the calculus.
What is it?
You did this answer. You want to say something?
Yeah, I mean, but is it fundamentally a better currency than something like a fiat? It's a hard question, but to some extent, I think you could say in the grand competition of monies, it's not a bad alternative for some of these cryptocurrencies.
Okay.
So I'm gonna be honest. Like fiat, does everyone know what fiat is? I'm gonna describe fiat.
Yeah.
Go for it.
No, I don't know.
Oh, fiat currency is the currency backed by a government.
Money.
Right. Okay. But there's so many people and there's so many terms that are starting to come out that most of us haven't played with before. So fiat, for those who weren't in using currency before, it's probably a little bit foreign. Like, fiat. What is it? A car? What the hell is a car? It's a Lambo. But what's super important? We're at the stage where you're like, okay, you own a bunch of currency, this crypto stuff, currency, and the proxy is what would you do before if you owned a bunch of stock at Fidelity or JP Morgan or wherever you own it. Like when it's time to sell it, what do you put it into, right? It's like everybody's got a different investment thesis of what they do with it, etc. Jamie's entirely right. There will be regulation that will say you're going to get taxed a certain way, and that's going to create all sorts of paths that a bunch of advisors tell you are the right paths to do with your money. Today, it's pretty easy to move stuff around. The real question I have is, I've gone and bought a bunch of crypto. I've sold a bunch of crypto. If you asked me to go back over the last year and figure out what I bought and sold and tell the IRS, I have no idea. I mean, I'm clueless about it. And so you'll see businesses that start talking this. I'm gonna guess most of you who've bought and sold aren't really tracking it that well, and the IRS probably won't even know how to come to you. So this stuff's all gonna formalize in the next few years. Knowing where to take your investments and put them elsewhere, that's gonna come from the government and a bunch of advisors.
Yeah, let's listen next time to the question initially.
Hey Ash, I have a question for you.
Was that founder friendly?
What excites you most in this space?
Oh, jeez, reverse question.
Yeah, all right. I guess I have to answer something. I didn't think I was going to have to answer something. Yeah, look, I think from my perspective, I've studied the internet boom and sort of introduction of the stock market a lot, just to sort of understand what was happening back then. And to me, one of the analogies I sort of look to is before Gmail was introduced, there was something like, I don't know what it was exactly, like a billion emails that were sent, every month. After Gmail, once the vehicle was in place, that number went up exponentially. I don't know what it was exactly, but let's say it's something like 80 billion, right? And I think the introduction of blockchain technology and allowing transactions to happen essentially seamlessly. I mean, yes, sure, there's technical challenges, there's regulatory issues. We've touched on a lot of them tonight. There's tax implications, and I think we're in gray area across a number of these areas. But I think sort of having the rails set, we're at the days now where Ethereum, Bitcoin, Tezos, a lot of the protocol layer stuff's getting set up, is allowing these transactions to happen at an exponential rate. And to me, I think the applications of that are endless, from Venezuelan families having a place to, store money and participate in the financial system, to, business-to-business applications. I think to me that really excites me. I think once you have these vehicles in place, we're going to see an absolute explosion in transactions, but it's going to take, there are growing pains here. So for me, that's why I'm super hopped up on this whole space, and that's why, one of the reasons I want to start Boston Crypto. How about you, Richard? I want to put it back on you.
I think very infrequently, I think you can hear me. Can you hear me? Yeah. I think infrequently in life you have a business model that's so disruptive to the way we think of it, and a application where you can distribute it so broadly intersect. And do I think this is a place if I was anybody in this room, would be spending time? I would probably be spending time here. The only non-replicable asset in your life is probably the time and how you spend it. And I think this is one of the most interesting things I've ever seen in my short career as a venture investor and formerly entrepreneur. Is there a hell of a lot of uncertainty? Is it literally bananas right now? Yes. But I think long term it'll pay its own dividends.
I'm spending pretty close to 100% of my time on this right now, and I can't resist. It's just every idea I hear about, I'm like, hey, can you tokenize that? Yeah. I met this great entrepreneur the other day, and he was pitching me on this idea, and I'm kind of it was just the two of us having coffee, and he's writing it on a napkin, and he was really passionate about it. I'm like, dude, it's 1995 again. The internet's being created. Spend a month just soaking in this stuff. It's the greatest opportunity you're ever going to see in your career. And if you don't, at least explore it, you'll never forgive yourself if you missed it. So do it. And I just find myself evangelizing everybody I meet because it's so exciting. Yes, it might totally explode. And we have that advantage as venture capitalists. We can put a quarter of our portfolio in this, and if it doesn't work, okay, it didn't work. If you're an entrepreneur, you spent 5 years on it, it didn't work, that's a big deal. So I recognize it's a different trade-off, but still, it is so exciting.
Awesome. I want to get to another audience question, which we've touched on, Dave, a little bit with, pulling from GitHub, But it's around what type of due diligence work does your company do to ensure, what kind of due diligence are you going to do? You know, it can be pre-ICO, it can be, I guess for you it's a little bit different, but, and Richard, you sort of alluded to it as well, but yeah, let's hear some thoughts.
So I would just say our initial thesis was really sort of borderline crazy, which is it doesn't really matter what we invest in. It really matters what we don't invest in. Okay, so we pretty easily take the 1,100 coins and can cross off 1,000 of them because they're just not investable for a variety of reasons. Underneath that, doing heavy due diligence at this stage, I think is a little bit too much work. I'm going to tell you right now, we're all going to look at each other and be like, what I was diligencing is actually some of the wrong factors because it's not like a traditional entrepreneurial venture. There's a lot of other factors. If you spend time with Jeremy, I don't know if Jeremy's still here, and he talks a bunch, like, I'm like, that guy's operating at a very different level than I've ever operated at. And many of the people who are getting in this space, it's really hard to diligence. So I do believe GitHub commits, GitHub trend, GitHub factors tell you a lot about whether there's a community that's building a chain that will be sustainable. And I do believe traditional volatility metrics, Sharpe ratio, things like that tell you whether the trading factors tell you whether this token, this currency is likely to have value. Those two things together are probably highly effective. You should know the team and what the company does. But for someone who wants to get in and buy baskets of currency, that's probably about as good as you get today, given you could go out and tomorrow sell it on an exchange or do whatever you want. That's probably going to get you pretty far.
Sharpe ratio, that was impressive. I didn't know this.
Like that? I just looked it up right before.
You don't know fiat.
Here's what I do know. Here's what I'll tell you. I know fiat now, you just told me. Here's what I know. We work with a data scientist who knows all the ratios and does all this stuff, and he told me like 3 times, and I'm like, you know what? It's good that you know it.
I mean, I think operationally, we are not set up to invest post-ICO because I think you really need to understand the technical underpinnings very significantly. And in fact, you need to understand what's the velocity of the community. Are they being incentivized to work on the right project, the right pieces of the code base? Is it meaningful technology? And you heard Pat Merrick and others talk earlier about that. But in the pre-ICO world, it's actually the exact same diligence and investment criteria, right? References on the founders. Is there really a meaningful market opportunity here? And that's uncertain, given a lot of it's around traction and how is it built. And is there a meaningful product value proposition, something that's unique to market? It's not a database. If I see another company that is trying to do a blockchain company, it's really just a database in a different form. I don't want to see that. And then really it's fundamentally 2 new elements from the way I've ever looked at a venture investment. One is, what is the ICO structure if you're going to go a little bit later in the spectrum? Totally different way of looking at it. And from a business model lens, you have to look at it in a totally different way. Does a token make sense for this business model? And I used to look at business models, it's just very different now.
So I'm getting told we're getting cut off. You guys have been awesome tonight. Thanks Dave, Jeff, Rich, Jamie, Deloitte.